I'll go ahead and introduce them and then read their bios, and they'll come up and they'll join us right now. So I'll go ahead and start with our moderator, Mr. Ron Garza. Mr. Ron Garza is currently the Associate Vice President for Workforce and Economic Development for the University of Texas, Rio Grande Valley. Ron oversees a comprehensive portfolio of centers and programs dedicated to advancing regional economic, workforce, and business enterprise development across the Rio Grande Valley. In this role, he works closely with local government units, regional stakeholders, and area economic development corporations to leverage the resources and graduates of UTRGV to attract new businesses, expand and scale entrepreneurial ventures, develop workforce programs, foster research projects, and create job opportunities. Prior to joining UTRGV, Mr. Garza held various roles in local government and economic development, including city manager of Edinburg, Texas, executive director of the Lower Rio Grande Valley Development Council, administrator for the City of San Antonio, and various administrative roles with Texas Health and Human Services. Mr. Garza holds a Master's of Education from the University of Texas at Austin and a bachelor's degree in Science in Psychology from the Texas State University. Ladies and gentlemen, please give a warm welcome to Ron Garza. Now I'll go ahead and introduce our panelists, starting with Larry Gonzalez, the president of the Upper Rio Grande Valley Plains Capital Bank. Larry C. Gonzalez is responsible for the management and growth of Plains Capital Bank's Upper Rio Grande Valley market. Gonzalez has served 39 years of commercial banking experience serving the Starr County and Hidalgo County markets. He joined First National Bank of Edinburgh in 2008, which was acquired by Plains Capital Bank in 2013. He has an extensive experience in commercial real estate, is actively involved in loan portfolio management, strategic execution, and risk management. In addition, he is actively involved in efforts focused on new economic development in the Rio Grande Valley. Currently, he serves as the Rio Grande Valley Partnership as director and officer. He also serves on the Starr County Industrial Foundation as director and officer. He is a board member of the United Way of South Texas and is a proud member of the Edinburgh Rotary Club. Gonzalez received his Bachelor of Business Administration and Finance from Texas A&M University. Please give a warm, Please give a warm welcome to the president of the Upper Rio Grande Valley Market for Plains Capital Bank, Larry Gonzalez. Next, I'd like to introduce the president and CEO of IBC Bank, Adrian Villarreal. Adrian Villarreal is the president and CEO of IBC Banks and serves on the bank's board of directors. Villarreal has 35 years of experience in banking industry and has been with IBC for 30 years. Quick side note, when I worked at GameStop many moons ago, parents, you know what GameStop is. You've probably had to go many times for your kids or yourselves. I worked at the GameStop in Sherryland, and I would have to cross the road to the Walmart there, and they had an IBC Bank. Nicest people, nicest place. Anyway, just thought I should add that in. As president and CEO, he oversees the entire Hidalgo County market, which includes 29 branches located in McAllen, Edinburgh, Mission, Weslaco, Pharr, San Juan, Alamo, Alton, Palmhurst, and Peñitas. Villarreal is one of the bank's most seasoned commercial lenders and retail managers with a strong background in business services. He has continued the bank's legacy of excellence in customer service. His top priority is to deliver the IBC Bank We Do More experience to their customers. In keeping with the IBC tradition, Villarreal is committed to serving his community. He currently serves on the board of the McAllen Chamber of Commerce, McAllen Economic Development Corporation, and on the board of South Texas Health Systems. He also previously served on the board of the United Way of South Texas. As a result of his active participation with this organization, he was awarded the prestigious South Texan Hero Award. Villarreal received his Bachelor of Business Administration and Finance from the University of Texas at Austin. He is married to Lupita Villarreal and has 5 children, Nicholas, Christopher, Alyssa, Alessandra, and Andrew. Please welcome to the stage the president and CEO of IBC Bank, Adrian Villarreal. Next, I'd like to introduce the Chief Lending Officer and Executive Vice President, Victor Sebi Haddad. Victor Sebastian Sebi Haddad was born in Baltimore, Maryland, but raised and spent the majority of his life in McAllen, Texas. That makes me think that as soon as he was born, he literally told his mom, I want to go to McAllen. Sebi graduated from St. Edward's University in Austin, Texas, with a bachelor's degree in computer information science systems. After graduating, Sebi spent several years in New York City working post-production, audio, and TV production, but eventually found his way back home to McAllen, Texas, where he began his 18-year career as a local banker. Sebi is currently employed by Lone Star National Bank as their Chief Lending Officer and Executive Vice President. While maintaining a professional career, Sebi has been a part of several local small business ventures, primarily in the lifestyle and restaurant industry, with some investments in real estate development and tech startups. Sebi is also in his second term as an elected official in McAllen, serving as the City Commissioner for District 5. Please give a warm welcome to the Chief Lending Officer and Executive Vice President, Sebi Haddad. Next, I'd like to introduce the Executive Vice President and Chief Operating Officer for Texas Regional Bank, R. Rene Avila. With over 3 decades of banking experience, R. Rene Avila is a highly accomplished senior operations and technology leader and communicator. He serves as Executive Vice President and Chief Operations Officer at Texas Regional Bank, overseeing the bank's activity across 4 regions, including over 30 banks in South Texas, Central Texas, North Texas, and the Houston area. Prior to joining TRB, Rene worked with International Bank of Commerce, IBC, for over 25 years, serving in different capacities, including Executive Vice President, Chief Information Officer, and President for the IBC Service Center. He also served as Executive Vice President and Chief Revenue Officer at Lone Star National Bank, where he oversaw several divisions and the sales activity for over 30 branches. Before joining the banking industry, Rene graduated from the Pan American University with a degree in accounting in 1982 and earned his CPA designation in 1986. As a community leader representing Texas Regional Bank, Rene has been a member of numerous organizations as well as having a strong history of civic involvement. Please give a warm welcome to the Executive Vice President and Chief Operations Officer of Texas Regional Bank, R. Rene Avila. Gentlemen, I'd like to remind you that you have 45 minutes, after which I will come up for a Q&A with the audience. And then don't forget you have photos after. It's all yours.
Thank you. Good morning, everybody. Honored, I'm absolutely honored to be moderating this absolutely panel of experts, and also glad to be following my friend Julian Alvarez. I am a little disappointed in him. He left the room, didn't he? I'm a little disappointed because long ago we made a pact for both of us to say we are 5'6", not 5'4". So he let the cat out of the bag there. So, thank you to the City of McAllen for hosting this. MXLAN is obviously a celebration of our culture, but having the Economic Summit is an absolutely vital part of this because the economy and all of us here as ambassadors of the economy, being exposed to these insights and these experts are absolutely vital. So thank you all for being here. Thank you again to the City of McAllen for putting this on. And again, speaking of insights, we're going to get right to it. Banking, I think we'll start at a very high level. Banking and financial institutions, people, go day to day, they do their personal banking, but don't really have kind of that sense of what it does to the economic engine. So let's start there, just from a high level of economy. But what would you share a few examples, specific points, or points of pride, because you obviously represent different institutions. But how does your institution positively impact the economy of the Rio Grande Valley in the South Texas region? Mr. Avila?
First of all, thank you very much for having me on this panel. And, where I wanted to head on this question is, in terms of community, that is one of our core principles. Okay, I was taking a look at how many hours of volunteering their employees did last year. Over 6,000 hours. Okay, really proud of that. And just like the other panelists here, we have a number of bank officers who are board members on local charities, et cetera. And then I was also taking a look at how many events just over the last 2 months. Over the last 2 months, we attended and supported almost 25. Okay, we have a close friend of the bank who calls it the cycle of prosperity. Okay, we provide support to local organizations. They in turn provide support to individuals who need it, and in turn, once they get better, they contribute to the local economy. So that's one of the ways that we show the community bank model.
Absolutely. Great term, cycle of prosperity. I think that hits it perfectly. So, Commissioner?
No, of course. And I think community banks are really a major driver of economic impact in the region that they serve. Just through the regular course of our business, we're lending out probably upwards of $500 million a year. That's capital that's being injected into the local economy. And that usually comes with the partnership that we have with these business owners. They're probably investing another 75 to 150 million alongside that. That's also going to grow their business, pay for employees, build infrastructure, add to the tax base, increase sales tax. Obviously, all of that results in increasing the revenues for the municipalities, increasing capacity for continued growth. And, some of the things that, you go back to the PPP days. You look at what regional banks and what these community banks did for the area. We were the most accessible to be the conduit for those funds. And Lone Star National Bank alone did over 6,200 loans. I think upwards of $250 million in federal dollars that were given back to business owners to get through that part of the pandemic, to ensure that they made their payroll. We were probably one of two local banks that participated in the ECIP program, an emergency capital program. We brought in $212 million that was specifically given by the federal government to lend out to low to moderate income businesses, to census tracts of low income, and to promote home ownership among, let's say, higher risk borrowers. And so that was another thing that we tapped into to bring external resources to this region. We recently partnered up with the Federal Home Loan Bank they're doing down payment assistance for people of lower wages and lower salaries, so that they can get people that typically can't get into a home, or maybe have the capacity from an income standpoint, but don't quite have the down payment. And so that's a recent program that we're pushing that obviously helps the community. I think we've got an application in right now to be designated a community development financial institution that will provide more avenues for us to bring external resources to the region to help the local economy. And to Renee's point, I think civic responsibility is probably huge for all community banks. It's obviously part of our board's directive. Our board basically tells us if it's for kids or for its education, you do it, because they know those are the main drivers and that's the future of the local area. So we donate a tremendous amount of dollars each and every month, hundreds of thousands of dollars, to all local organizations. I mean, everything from a small booster club to what I would call the more established nonprofits. And we track and promote our employees to volunteer. We ask them to be out in the community. I think civic responsibility is critical. I know I saw Vipul Patel here. He's in charge of our bank investment department. Through what he does, Vipul's always looking for, whether it's private placements or bond purchases that support the local school districts or some of the local municipalities. So that's another avenue that we can provide the resources for those organizations to also provide the services that they're good at providing. And so, whether it's through our course of business or through our civic responsibilities, I think Lone Star National Bank is always focused on ensuring that we focus on the growth of the community.
Excellent. Thank you.
IBC Bank's been around, for about 58 years, and We were organized, founded, born here as a deep South Texas institution. And so having the type of profile, it's always been very important for us to be champions of economic development here in this area. And so, when I first got to the bank, kind of going back and looking at this thing more at a high level, Ron, is that I remember back in, a long time ago, or back in the early 90s, NAFTA was coming around. And I remember that there was this electricity in the bank, and there were trips being made to Washington, D.C. There were executives from the bank that were participating in think tanks and business committees and councils to give feedback on that original NAFTA agreement. And we were very much engaged in that. And as we know today, right, that when NAFTA first came around, it's really transformed this area. I mean, I remember back growing up and we had double-digit unemployment numbers. Today here in the city of McAllen, I believe it's about 4 to 4.5%. Incredible progress. And we continue to do that. Even in this last update up to NAFTA through the USMCA, we were invited to participate, to be part of think tanks around that. And I remember talking to the head of our international department that was part of a really close committee to that. At the very beginning of those negotiations, he was saying that the table was kind of pretty much empty. It was him, a bunch of policymakers, a few politicians involved. And then as the agreement was coming towards an end, everybody showed up. Big corporate America, your big multinational banks, transportation companies, the automobile industry, all of a sudden the table was full. And I remember him telling me a story is that around the table, they were kind of looking at him and saying, "Who are you?" And it really wasn't a question about how did you sneak into this table? What it really was about is how do you know so much? And I think the reason why is because we take a deep commitment, and again, being a champion of this area, being involved in this area and promoting economic activities that make a real difference. And now when you look at us transforming from an agricultural society to a trade society, now becoming a medical hub, and the growth in the institutions down here, it really kind of started with NAFTA opening that floodgate. And so we take that responsibility very serious. We want to be, just as all my peers here, we want to be really good corporate citizens. And I think overall is that engagement and being able to provide economic opportunity for everybody. For everybody, I think that's one of the things that I've been the most proud about in terms of IBC Bank.
Thank you. Mr. Gonzalez.
Thank you, Ron. Let me kind of start by identifying who we are at Plains Capital and what we do. So Plains Capital Bank is a Texas-based financial institution based out of Dallas. We have 55 branches throughout the state. 10 are in the Rio Grande Valley, 7 are in Hidalgo County. Our parent company is called Hilltop Holdings. It's a $16 billion publicly traded company. We have a couple of sister companies. One is Prime Lending, which is a national mortgage originating entity, and that's all they do. They do 1 to 4 family mortgages, and we also have a public finance division, which is called Hilltop Securities. And so that's what we do. That's who we are. That's what we bring to the table. As far as economic development, we keep our finger on the pulse of the valley. We're very involved in community involvement. We have our finger on economic activity. We have representation in the Rio Grande Valley Partnership. We have representation in the McAllen EDC, and we also have representation in the Mission TERS. So we kind of know what's going on. In addition, we have an extensive network of existing clients and business people on both sides of the border that we are in constant contact with to kind of always see what's trending up or down in the industries and kind of know where we stand and what we do. And as far as economic development and prosperity, I mean, we're deal makers. That's what we do. We're always invite a deal to the table. We look at it, we evaluate it, and see if that's something that we can do on the commercial side. We're always available, and that's kind of our game. But from a bigger standpoint, our municipal finance division, they basically operate in the area. They do a lot of municipal finance advice, advisor services to municipalities and cities, schools, public entities, which they need to have. In fact, they've been around for a long, long time. They provide services in this area, but statewide also. And I mean, several cities and school districts here in the Valley use their services. In fact, I'll give you an example. They helped a local school district that was started in the Valley to kind of grow throughout the state. And we helped them secure through our financial advice services hundreds of millions of dollars to grow statewide. And it's been a real big success. And, we continue to offer those services from a big picture and really fund economic growth. Economic growth can be advancing schools, public health, housing, whatever the need can be. But we have that available to all public entities, and it's something that's really helped the area a lot, and I know it's helped the state as well.
I know some of you mentioned jobs, and stemming from our last panel, I know most likely you have graduates of UTRGV and South Texas College, but just real quickly, just from a job creation standpoint, about how many employees do each of you have here in the Rio Grande Valley? Mr. Gonzalez, you want to start? Just approximately.
In the Rio Grande Valley, we probably have about 400 employees in the Valley. I will say our parent company has about 3,700 employees, and through our 3 sister companies, we have 325 offices within the country. So we extend services throughout, but we have about 400 employees in the Rio Grande Valley.
For us here, we have 29 branches here in Hidalgo County. We've got about 12 branches in Cameron County. We've got a few other branches in Starr County. I would say overall, we probably have close to about 1,500 employees here in the Valley.
Commissioner?
We've got about 675, maybe up to 700 employees, and obviously we have a presence in San Antonio as well.
We have right now 13 branches in the Valley. Soon to add our Rio Grande City branch here in a couple of months. Total employees for the company is around 500. And here in the Valley, it's I'd say around 220.
Wow, that's impressive. Just among the 4 institutions here, that's a few thousand jobs, just high wage, so really that kind of that cycle of prosperity. You're doing it as an employer as well, so excellent. The panel was titled "Future of Banking." So let's kind of look at our crystal ball here, and what are some trends? And we'll start with Mr. Gonzalez. What are some trends that you foresee that are positive or maybe even concerning that you see the future's bringing in financial institutions?
Okay, so banking is very dynamic. It's heavily influenced by many factors. We have regulatory factors, we have economic factors, we have commercial real estate. So it's always moving, and what we do, it changes quite a bit. As far as the future, I think AI is going to be a big part of what we see. FinTech, which is an acronym for financial technology, is also something that's developing rapidly. I think those 2 things will likely influence the way we do things internally, but I think they'll also influence the way clients and customers do their banking electronically and digitally. And we'll probably see some enhanced delivery channels for our clients. And I think AI and FinTech will probably dovetail into the regulatory environment, and it might influence how we do things internally to make sure we comply with with all that comes out. I think as far as positive things, I think being on the border has been a great deal, a great opportunity for all of us. I think Mexico's really seeing a big uptick in the nearshoring. There's a lot of activity going on, which is going to benefit us in the border, but also in Texas. Mexico's unemployment rate right now is less than the U.S., which is kind of, you wouldn't think that. That's kind of the reverse of what we've historically seen. But their GDP is also right behind the United States, just trailing. It's about, it's just a couple of points below it. But the nearshoring has brought all of this capital from China and the Asian region into Mexico, which will benefit them and it'll benefit us. As far as, the negative, some of the risks, I think as we see AI as a positive thing in FinTech, there's also a negative side to it. I know cyber tech is kind of a big deal. We're probably seeing more fraud today than we've ever seen before. And I think AI is probably something that will probably influence more, data breaches and things of that nature. So it will definitely require enhanced cyber defense systems and things of that nature. I think that's probably the biggest risk. Of course, we also have 2 elections coming up. We have the Mexico election, which is in about 30 days, and the U.S. election. So we'll have to see what trade policy changes come into play and how that affect us. But there's some risks.
So definitely seems like your eyes are on a lot of potential dynamic elements.
You kind of have to. There's just so much. There's so many moving parts, and today it could be one thing. Next week it could be something else. And banking's about risk identification and risk management. So we have to be on the ball all the time.
Mr. Vidal.
I think it's very true. I mean, if you look at what's happened to our industry just over the last 4 years, I mean, we've had to deal with things that we've never had to deal with before. You had COVID, you had inflation, you had interest rates, you had to deal with staffing issues, you have to deal with what Larry talked about, cybersecurity issues. I mean, there's just a lot on our plate. But if you kind of look at trending in our industry and really what are the things that probably worry about the most, I think it has to do, I think, with digital products and digital channels. And through this COVID period, banking industry, especially in the community banks, we were offering digital and electronic products. But during COVID, everything changed. And everything that you were working on had to be on the front burner. You had to devote tremendous resources to that and really try to bring them to market as soon as possible, which is not an easy thing to do. I mean, it sounds like flipping a switch. When you've got systems, you've got security, you've got support, you've got staffing, you've got to test it. I mean, there's a lot of things involved in that. And so it pushed it forward. But what happened during that time frame also is that our competition completely changed. I mean, to deal with these competitors here on stage, it's something that we're used to. We do it every day. What we're not used to was dealing with competitors like Cash App, PayPal, Venmo, right? And so the digital transformation of our industry and the trending of that, I think we've really, from the banking side, especially from the community banking side, has just really started. And it's going to be something that can potentially impact us if we're not really ahead of it. Kind of an example, my 20-year-old son gets a check, and he literally calls me on the phone and says, what am I supposed to do with this check? I said, well, you got to kind of walk into a bank. He said, do I really need to walk into a bank? I said, no, you don't. You can actually go to a drive-through. True story. Drive him to the drive-through, and I get another phone call. I'm here at the drive-through. What am I supposed to do? Okay. So think about his children. We're generations away from what customer needs and expectations are in terms of digital offerings and digital channels is going to completely be different. Our competitors are not going to be your traditional banks, right? It's spurred with the fintech stuff. Right? And so in terms of trends is I think that the whole digital offerings and channels, and you also have to remember that nothing stays stagnant, right? Especially when customers demand more, right? You go back and you think about, God, I remember when I used to walk around with a Walkman and a cassette tape, and you try to mention that to your kids, are saying, what? Right? And so as consumers demand more in terms of services, digital services, it's going to change. Right? And so the trending of our industry is making sure that we completely satisfy customer needs.
Excellent. Thank you. Commissioner?
Yeah, so a lot have been mentioned about AI, and there's no doubt that AI, fintech, is going to be a big part of the future. If you go back several years with fintech, you constantly heard disruption. It's now really moved more towards collaboration, partnership, and it's because those fintech companies grow big, grow fast, was kind of their mantra. Step on the banks, just move ahead. At some point, they come to realize that they need the infrastructure of the banks. They need the retail presence, the selling point from the community banks to get those products really into their own customers' hands. So I think most of the banks here now offer Zelle. We work Cash App, Venmo, all those pay services kind of now work seamlessly through the overall banking system. But we see the transactions climb. It is true. The use of those apps and those payment platforms has dramatically increased. So the community banks, he is right, it's always been a friendly competition. It's always been a competition where we're looking to help each other, actually. And when we're in a region like the Rio Grande Valley that is constantly growing, there's just enough business for everyone to go around. And so we're always working with each other, and we typically work with the same people. But there's no doubt that technology has brought convenience, and with that comes the threat of what the smaller banks or what community banks can provide, because they have to continue their operations. And that's going to be a big part of the future. Another thing that we see with banks, community banks are still a foundation of small to mid-business financing throughout the entire nation. And we see that down here. That is why we still have a very robust community bank presence, which is great for our region because there's access to capital, there's access to financial resources. But what you see is you see the deposit sides dramatically moving to the big banks. And that strains and makes it more difficult for community banks on their balance sheet management. We fund our loans through the deposits. So they all go hand in hand. And so we need the deposits to continue investing in the community. And so we have to be more strategic, I think, looking outward on how we manage our overall assets. We probably have to be a little more conservative in that regard. And with interest rates, right, if you go back to December, there were supposed to be 7 interest rate hikes. If you go back a week ago, there was going to be 1 in December. If you look at it this morning, I think the jobs report came in a little soft, but almost neutral. Now they're saying maybe 2 interest rate hikes, 1 in September, 1 in December. So that type of volatility is difficult for bank management and bank executives to some extent project outward and create strategies. But that's kind of the environment we're working in. He is right that what we've dealt with in the last 4 years has been a lot of firsts. And so I think we now have to realize that we have to look outward how we look at these first, whether it's technology-based, fraud-based, or economic-based, how we're going to react to them.
I know we were looking into the future, but based on the first 3 comments, Mr. Avila, would you say that the last 5 years have been some of the most adaptation?
Absolutely, absolutely. And just to add something that Sebi was sharing, after the Great Recession, what ended up happening? The mega banks, the large banks, they couldn't acquire. So what they did was they plowed their money into organic growth. Okay, and they've done it, in a major way, right? We were taking a look at Chase Banks. They just had announced their earnings, and we're taking a look at one slide that they have on their earnings call, and what they were showing is let's put aside their 63 million mobile customers, okay, active mobile customers they have on there. Right now, 60% of the U.S. population is within a 10-minute drive of a Chase Bank branch. Okay, their goal is to get to 70. That aside, okay. Well, the other point that we were looking at from a digital standpoint is, everybody's has a cell phone, here, and we were, one of the questions that we were asking ourselves is how many times do people grab their phone? On average, you can Google it, right? I think the average is 60, okay? 60 times a day. So more and more features are going onto the cell. The days of just, going out there and having balances and transaction history and alerts on a cell, it's over. Now it's putting more and more features into the device. Right, and we're now seeing there are at least 6, 7, 8 features that you've got to have on the cell to be relevant, to stay relevant. And so that's what we're continuing to work on, is making sure that the digital platform stays up to date as much as possible.
I felt the nervous energy of everybody having to touch their phone when you said that. So,
and that was the average. Can you imagine those that are super users?
Oh yeah, absolutely. So, Commissioner, you mentioned small business, and today, actually, this Friday marks the end of National Small Business Week, for those that didn't know that. And obviously, the community banks here have a very strong essence on small business. Starting with you, and then comments from maybe each of you, could you speak about the interactions with our local growth of small businesses and what that looks like here?
Yes, well, I'll reiterate that the community banks are really the foundation of small to mid-business financing. And so most of this, while we're so used to the convenience of the online, you can open up an account, online, you can deposit funds, you can use these apps. They don't have a physical presence. But I could tell you when someone needs a loan, for whether it's for construction, for their mortgage, for expansion of their business, they've got to get up out of their chair in their car and visit a physical branch and talk to a loan officer. There are business financing online, don't get me wrong, but it's usually capital lines of credit, small unsecured lines, kind of, secure your business financing today. But for major investment, for subdivision development, for startup of a restaurant, if you need a 7A SBA loan, you've got to visit an officer. You've got to have a relationship with a loan officer or with a banker. And that's one of the things that I think we focus on and the rest of the community banks focus on is we push and urge to the community to build a relationship with a local banker. If you don't need them today, you're likely to need them in the future, especially if you're going to be in business. And going back to PPP, we saw that. We processed every single application that was brought to us. Everyone that knocked on our door got their application through. I could tell you the big banks, they had their online submissions, tens of thousands, if not millions of applications just dropped off, missed the deadline, didn't make the cutoff. And that's because those people did not have someone to go to say, I will get this done for you. And so it's super critical that community banking is sort of supported and I think sustained. I think it's part of the local economy. No one knows the local economy better than a banker. We really become advisors to a lot of the business owners. We have business owners that not only come to us when they need a loan, they just come to us and ask for advice. They want to know what's kind of happening, what's going on, what do we see, what trends do we see in the industry. And so when you've become an advisor to the small business community, you know you're doing a good job. And so I think it is important that small business, most of small business does support community banking because they find out pretty quickly they need to rely on them.
Any comments on small business?
I completely agree. And small businesses also are a key identifier of a community, right? I mean, and we've also seen, a lot of people, our neighbors from the south of us that are coming here and starting businesses. And you have to have a relationship. You have to be consistent in how you deliver products to small businesses. I mean, it is a partnership. You really need to get to know who they are. And community banks really fill that gap. And that's why I completely agree with Sebi. It's so important that the community banks stay very healthy. And unfortunately, sometimes there's overregulation, and it does have a big impact, right? But we fight those battles because at the end of the day, what we want is we want our small business people to be successful because if they're successful, we know that we're going to be successful. So it is a priority for us.
Mr. Gonzalez, any comments on small business?
Well, I think the state of small businesses in the Rio Grande Valley is generally good. Unfortunately, COVID did impact a lot of small businesses, and some of them did not succeed. But on the other side of that coin, there's a lot of newer small businesses that are trying to get established, and I think community banking. We're here, and people, if they want loans, they can always just dial 1-800 and apply online and go that route. But we take pride in people coming in and seeing us, sitting at the table, having a cup of coffee, and spending 20 minutes with our clients. I can sit with an existing customer, and when he leaves, I know about his labor problems, his cost of goods sold, what are his sales doing, what were his property taxes, and so I can get all that information from him, and I can know how he's doing it, and he'll ask me what I think is happening in the economy and how it's going to impact him, and so I think a lot of them will see us as advisors and kind of as partners to help them make business decisions, and that's kind of a good thing about being in a small community. Even though we're multi-billion-dollar banks, we can still function and meet our customers and talk to them. In some of the bigger cities, to get into the bank, you have to push a button and they have to let you in, and that's kind of of course, they don't see many customers like we do, but I know we take pride in talking to people. Banking's about people. And once you get to build a relationship with the right people, then that relationship will pretty much stay with you. And that's kind of what we like to do.
Interesting point.
I couldn't agree more with the other comments that were made. I'll just add one other comment on it. There's been this myth about digital adoption down in South Texas, right, versus the rest of the state. And it could not be further from the truth. It's just not the case. We see digital adoption down here at higher rates than across the state. I'm talking about our markets, right? The markets that we serve. And so because of that, there is a constant discussion with our customers about features that they're looking for, security, cybersecurity issues, potential fraud that may be going on, et cetera. And so those are the conversations that we're having with small business.
Wow, that's a interesting insight there. Some of you mentioned just that structure, and we look at restaurants. They're changing the way their physical buildings look, based on the insights that you just provided. Would you foresee banks looking different in the next 5-10 years? Is there something structurally that you'd see?
Absolutely. You can take us, right? We have right now on the docket that is in process 9 additional branches across the state. Rio Grande will be our 14th here, and then we have 4 in Central Texas, 2 in Dallas, the DFW market, and then 2 in the Houston area, and they're much smaller. Right, much smaller footprints. You just don't need that much space as you used to. There are banks that are going to a point where all you have in the facility are ATMs. Right, just don't know if that's something that we'll do in the foreseeable future. But that is something that banks are trying.
Commissioner, do you have any thoughts on? Do you foresee the structure looking different?
There's definitely going to be a shift. There's less need to go to the branch on a daily basis. So it's going to change how branches look over time. Lone Star National Bank is continuing to expand. We're also looking at several new branches throughout the Rio Grande Valley. We've talked about entering new markets. But there also has been discussion revolving around what those branches should look like. There's been the term micro branch, a branch within a shopping center, right? Maybe an anchoring a corner. A single drive-through, right? So you're definitely minimizing the footprint because we have to consider the efficiency in our operational costs. Sure. But our goal is to continue to provide the services, and a physical branch is still hypercritical to a community.
I think that balances, Adrian, what you were sharing about your son that maybe didn't want to go to a bank. Some people want that. So you have to balance this physical adaptation.
You
right?
do, and here in the Valley, I think that you see more customers want to go to a physical branch, let's just say, as opposed to maybe in North Texas. But we've always tried to make ourselves very convenient to customers, always. And I think proof of that is that, we've got 2 branch locations inside La Plaza Mall to be accessible to customers. We've got in-store branches inside the Walmarts that are open 7 days a week, extended out and open on Sunday. And so, in being the retail side of our bank being, very strong, is we've always tried to make sure that we're completely accessible to our customers.
Mr. Gonzalez, any thoughts on?
Absolutely. Let me say, we've always had bank apps available for our customers where they can do banking by phone, and for the longest time they were ignored. But when COVID hit us and banks basically shut down, people used them, and they liked them, and they still use them. And so what COVID taught us was that you can be a bank and serve all your customers, but people don't have to come to the bank. And even after COVID, the traffic level of people walking into a bank has probably declined at least 50%. People have just got accustomed to, sending wires by phone, depositing checks, getting check images, transferring funds, using a digital payment application. People have really got accustomed to that. So I think we'll see less brick and mortar banks in the future. Occupancy expense is, I guess, the 3rd largest expense of a bank. And right now, in a time where every bank is severely struggling with margin compression, that's certainly an area where I think banks will be looking to reduce, and less brick and mortar and maybe small leasehold facilities is probably something that we'll be seeing. So I expect to see that.
Thank you. So we'll dive into one last question before we open it up to the audience for their questions. But obviously, this is a celebration of our international culture as well as our economy. So, Adrian, let me start with you. But let's talk about banking in this international, our great relationship with Mexico? What does that look like?
Well, I guess, we are International Bank of Commerce, right? We're a bank and we do international commerce. And so I think in that relationship, in my view, is that you have to be fully immersed into that market. I just don't think you can just kind of dip your toe because of where we're located, right? There's just so much activity, and with nearshoring, it's going to grow over time. And so you have to be completely immersed in that, which was really one of the kind of the founding principles of our bank being a border bank. And you have to commit resources to that. I mean, we've got international departments in all our major markets, including the ones up in North Texas and Oklahoma. And so you've got to be connected. And so for us at IBC, out of 52 weeks out of the year, 33 weeks, there is an IBC team in Mexico traveling throughout the entire country of Mexico. 33 weeks out of the year. And in these trips, they're spending at least 3 days visiting with customers. And we've done that for years, understanding what the needs are. And I also remember back in the day, we used to do financing in Mexico. I mean, I was involved in financing a number of different maquila plants along the border and even some hotels in the interior of Mexico. And obviously that's kind of faded off with a little bit of the uncertainty. But now what we're seeing is that our Mexican neighbors are now investing in the U.S., right? They need cold storage facilities. They need warehouse space. They're making real estate investments. And so as we're visiting with them, then we're guiding them because they're seeking our advice, because we've built long-term relationships with them, is how do I do this? And so we've always understood the value of developing strong relationships with our neighbors to the south. It's been really important for us.
Let me bounce around a little bit, Mr. Avila. You want to take that?
Yeah, wanted to share that we just had our chairman CEO, Michael Skeeve, spoke at the Texas-Mexico Business Forum in Dallas a couple of weeks ago, alongside Jerry Schrebel, together, and their discussion was about nearshoring. Okay. Jerry came at it. Jerry's, if you know Jerry, he's, been at it, Mexico relations for 40 years. And his thought, or his comment was the first 20 years that he spent dealing with Mexico was dealing with U.S. citizens and businesses trying to do business in Mexico. The last 20 years, it's been Mexican citizens, right, that are wanting to do business. And Mr. Skeeve came at it from a couple of angles. One was risk, and the other one was certainty. And so it's that whole issue of how do you do lending in Mexico, right, in a secure manner. And so it was a really interesting conversation. Also, I just wanted to share that we have a team that caters to the Mexican national market, and they travel extensively in Mexico, to develop business. And then we also have individuals in Dallas and Houston area that are capturing that Mexican national market in those regions. And then we also are supporting Mexican nationals who are binationals here in the U.S. in purchasing either homes or investing in businesses. And then we have domestic customers who are, they're doing business in Mexico, right? And we support them from a foreign exchange standpoint, facilitating payments. So a lot of activity that we're doing in that relationship with Mexico.
Mr. Gonzalez, you international.
Well, I think as the nearshoring continues in Mexico, it probably presents one of the best opportunities for us in a long time, and so that will probably continue. I don't know how long, but Mexico is certainly stepping their game up economically, and I think for the whole border area, there's great opportunity. We gladly accept Mexican folks as clients. We have a lot of them. A lot of them they're Mexican nationals. They have dual citizenship, or a lot of them are here with investor permits because they operate under a Texas entity on this side, and they do business and that way. So we can underwrite them as long as they are a Texas entity with verifiable income sources. We do not travel into Mexico. It's just a policy from a risk standpoint. But the reality is, I don't think we really need to because a lot of them come to us, and Mexican clients, probably half of mine only speak Spanish, but Mexican clients are very loyal and they love to send referrals, and we get it all the time, and it's something that we take advantage of, and I see a future there taking care of these folks, and I think we'll see more business from Mexico as we move down the road.
Commissioner, you want to close this question out?
Of course. We celebrated our 40th year anniversary in 2023, and since we had started, we've always had an international department. We've always banked foreign nationals. Now, over time, there's been periods of time where it's gotten very, very difficult. The regulators have made it, it was kind of, you had post 9/11 changes, you had banking industry changes beyond that, but we also live in what they deem a high-intensity drug trafficking area, high-intensity money laundering area. And so those affect the way regulators sometimes see the way community banks work with foreign nationals, and they're very weary of the money that comes in. So the level of due diligence that we have to perform as community banks is very extensive, but also very costly. But despite that, we still focus on banking foreign nationals. Just as was mentioned, lending in Mexico probably has dropped off a little bit, but we still provide a lot of investment services. We provide a lot of depository services. And with the strength of the peso, we see a lot of foreign nationals, they want to bring their money over here. And just as we want to bring in external dollars from the federal government, from the state, we want to bring in foreign dollars that are invested into our area. So we're always looking for new clients, foreign nationals that are looking to invest in the region. And that's just always been part of our business model as well. I think being on the border, you have to make that part of your business plan, despite the difficulties regulatory-wise or manpower-wise, to serve that part of the community, because they're a huge part of our local economy.
I think each one of you also, mentioned nearshoring, how that effect is real. So that's great to hear. I know our keynote later will be diving more into nearshoring, but it's good to see that we're seeing the financial aspects of that here in the Valley. So I think this is a good time to open it up for a few last questions so we can stay on time. So I don't know if there's a mic out there.
Do they have to be softball?
What? Yeah. I think these were medium. Yeah. So throw your softballs, throw your hardballs. Any questions for our esteemed panel here?
We have a couple of them. We have one right here and one over there. We'll start over there and then we'll come this way.
Well, I have a hardball and a softball. Hardball first. Back during the bubble, real estate bubble, one leg fell. That's the residential. We were waiting for the commercial side. Never happened. But I see it coming again with the higher interest rates and the balloons on the commercial lending. It's way higher. A little concerned about that sector. Your thoughts on that one? And go ahead, I'll do the softball in a little bit.
I think if you could just clarify that question just a little
Their
bit
thoughts
more.
on the commercial lending with the higher interest rates, with the refinancing coming up with the higher interest rates.
Okay. Specific to interest rates.
Yeah, of course. Obviously, when there was low rates, there was a tremendous amount of what they call CRE, commercial real estate, that was financed, gobbled up, started, built at rates at 4%, 4.5%, maybe 5%. Those notes, if you look at the majority of bank financing put on a 3, 5, 7-year kind of term, those notes are starting to come due, and rates are now, prime's at 8.5. They're likely to refinance, whether it's near prime, above prime, slightly below prime. But it dramatically changes the level of debt service that needs to be serviced by the property or by the piece of real estate. What you see is a lot of those going underwater. So they're not meeting bank covenants. And so what happens is the banks either got to work with them to refinance, but what a lot of banks are doing is they're forcing the client to pay that note down to kind of right-size it into where the income received by the property is self-sustaining to the note. And so that's definitely something I think the regulators, the biggest thing that they're looking at is what they call CRE concentrations at banks. When we get examined, we have our examiners coming in here in about a week and a half. That's probably one of the things they're going to focus on heavily. We don't have the same type of what I would call CRE lending that occurs in the markets like Dallas, Chicago, New York, where they've got properties that are hundreds of millions of dollars. They've got huge packaged up groups. we're pretty well diversified down here among our borrowing base and the real estate that we finance into. There's a tremendous amount of investment real estate, but compared to the rest of the nation, what they deem commercial real estate, I do think there's a lot less risk down here. And I think the local banks have done a very good job of sort of even forecasting that going years back. There's a lot of underwriting that goes into effect that we do from a local bank standpoint that helps mitigate some of those factors. So there's definitely going to be, I think, a national effect, and it all depends on how much default occurs, right? The banks will either work with them, or you never know, the borrowers might still have the capacity to continue paying despite being sort of in a negative carry. But as long as the debt service and the properties stay current, we don't know exactly how much will fall out or how much default will occur.
Maybe one other quick response.
If I could respond to that real quick too, is I think it's also important as rates go up, because we didn't raise your rates. I mean, it was the Fed, okay? And so I think what's important there is that regulators work with banks. We saw that during PPP and during COVID when people's cash flows were strained. We actually worked with our regulators to give borrowers flexibility, right, to continue to survive and to make their payments. So when we work together with regulators, we can do good things. I think the challenge sometimes is the regulators don't listen, right? And those can be very, very challenging. And so I think as rates come up and business continue to be strained, I do believe that, you know, we're battle tested through COVID. We can handle it as long as regulators give us the flexibility to work with our customers.
One last question.
Yeah, right over here.
Maybe Mr. Gonzalez, Mr. Avila can respond to this one.
I just wanted to follow up with the international aspect. Now that the Fed is considering that digital transactions and clearance, so that it's not going through the channels that we're used to, like the way remittances are, do you see that influencing or impacting negatively on any of your international business, or not there yet?
No, we don't. I was taking a look at the percentage of wire transfers into Mexico. We've got about 20% volume. You know, the dollars maybe, you know, somewhat smaller, but no change from that aspect. You know, on the debit card side, we have a number of individuals, number of customers who are conducting business in Mexico, throughout Mexico, right? Sizable dollars, right? No change there.
I think with digitization, we'll probably see an enhancement to that, and we'll probably see more processes to get that done, although there'll probably be some regulatory requirements, and there'll probably be some additional type of cyber apps to govern that. But I think that will make the process easier as we go forward. We haven't seen them yet, but I think we will in the coming future.
Thank you very much for your questions, ladies and gentlemen. This has been the Bank Leaders Panel, the future of banking. Please give them a round of applause.